We're going to start in 5 minutes, colleagues. Let's wait for others to join us. I want to test my sound. I'm going to play a video.
About the different entities under the National Department. Have you ever wondered about the different entities under the National Department of Human Settlements?
In a world where housing is a basic human need, there are entities working tirelessly to ensure that everyone has a place to call home. This series is dedicated to introducing and educating the public about the different entities under the Department of Human Settlement. The Property Practitioners Regulatory Authority, PPRA, is a Schedule 3A public entity of the National Department of Human Settlements, which was established in February 2022, in terms of the Property Practitioners Act 22 of 2019. But what does that mean for you? 1. Regulating property practitioners, promoting sector transformation, and protecting consumers from undesirable practices. 2. We regulate the property practitioner profession by establishing norms and standards, providing education, licensing, enforcing regulations, and managing the Property Practitioners Fidelity Fund. 3. The PPRA also conducts regular inspections to ensure real estate firms comply with the provisions of the PPRA.
But what exactly is a property practitioner?
Property practitioners include real estate agents, brokers, property managers, and auctioneers. Essentially, anyone involved in the sale, lease, or management of properties falls under this category. Every property practitioner must hold a valid Fidelity Fund certificate, FFC, to operate legally. The certificate is issued by the PPRA and renewable every 3 years. The FFC ensures that the practitioner is registered, compliant, qualified to conduct property transactions. We are dedicated to regulating all conduct covered by the Act related to property practitioners and consumers. Additionally, we are implementing measures to ensure the property sector is transformed as outlined in the Act, fostering a more inclusive and knowledgeable industry.
Need to verify a property practitioner or lodge a complaint?
You can contact our call center on 0872853222 or visit our website at theppra.org.za for resources and support. Our head office located in Santan, 63 Werder Road East, Johannesburg. We are here to help.
Thank you for watching. Stay tuned for the next episode.
Welcome, everyone. Good morning, colleagues. Thank you so much for joining today's webinar. We are fortunate to have three distinguished presenters with us today. The topics we're going to look at is the trust account compliance under the PPA, why successful property practitioners support property inspections, and our third topic will look at understanding the legal framework of evictions and what property practitioners, tenants need to know. We're going to have three speakers today. One of our speakers comes from PPRA. Her name is Ms. Dineo Mpatlele. She has 20 years experience in the property sector, and she's an admitted attorney with Master of Law, LLM degree. She's also an ethics officer, chairperson of the PPRA Pension Fund Scheme. Currently now she holds a position of executive manager in the compliance audit and inspections. And she also holds a position within the PPRA of inspections of ethics officer. And we're going to have our second speaker who is going to take us through evictions, especially the landlords who are in the meeting who are going to benefit from this. Her name is Ms. Elise Leroux. She is a dedicated in assisting landlords with defaulting tenants and aiding agents in expanding their businesses. She holds an LLB degree. She began her legal career as a candidate attorney at Nadas Groove Attorney, where she progressed to associate, specializing in criminal and civil litigation over a decade. She has 7 years experience at Steyn and Steyn, initially as a senior associate in family law and general litigation. And her topic, yes, it will focus on legal framework of evictions. We know that her company, Expelo, some of you in the webinar would have been familiar with the company that deals with evictions, lease agreements, and rental collections. But she's going to take us through and elaborate on her presentation. Our third speaker, colleagues, is Ms. Maricia Robas. She is the owner of Gauteng Property Inspections. I am not going to introduce her much on that because she has prepared for us a wonderful video that I'm going to play so that she explains in the video what she does and her experience coming with that. Let me just flag her video for you so that you can see, colleagues. Just a second. Okay, here we go.
Robers, the dynamic force. Introducing Maricia Robers, the dynamic force behind Gauteng Property Inspections, and a leading expert in property inspections across South Africa. With her extensive experience in construction and inspections, Maricia has saved her clients hundreds of thousands of rands, making her an invaluable ally in the property market. Maricia is a NABISA Master Certified Inspector and an Executive Director of NABISA. She helped develop the National Building Inspector Qualification Curriculum and is an ITC certified roof inspector and asbestos inspector. Impressively, she's the only female inspector and the only inspector in South Africa with these certifications. Her services are a game changer for home buyers and property investors, saving them millions through meticulous pre-purchase inspections. Maricia's sharp eye for detail in snag list inspections and quality control during construction has saved homeowners and developers significant sums. Passionate about maintenance, Maricia offers 10-year maintenance plans for complexes and created the Proud Homeowner online maintenance program, which has helped homeowners save big on maintenance costs. She also has the book, The Proud Homeowner, to assist property owners further. Her expertise has earned her high-profile jobs like inspecting the Vietnamese embassy and ambassador's residence. Maricia has been featured on The Debbie Show, All About Property, Mix FM's Building Joburg, Power FM's The Bobby Malloy Show and in You Magazine. As a captivating speaker, Marisha has wowed audiences at various events, including sharing the stage with Robert Kiyosaki in Cape Town and Johannesburg. She's a regular at investor conferences, spreading her knowledge to thousands. Marisha Robers isn't just an inspector, she's your trusted expert, ensuring excellence and quality at every turn. Introducing Marisha Robers, the dynamic.
Thank you, colleagues. I hope you all managed to hear and see the video. And she is going to take us through the inspections on all residential and commercial buildings, and also what it means to inspect a full home and only, to do some inspections that doesn't include a full inspections on the home. But she's going to take us through the presentation. We are not going to take questions now. We're going to allow the speakers to take us through the presentation. I have muted everyone. Please put your questions on the Q&A. Please put your comments or questions even using the chat. The recording will be on our PPRA YouTube channel after the webinar. The slides will also share, and any queries related to other departments, I will see them and I will forward them to the relevant managers. We're going to start with Ms. Dineo Mpatlele. If you can flag your presentation, ma'am, and take us through the presentation. Thank you.
Good morning, everyone. Good morning, Naledi. Can you see my presentation?
Yes, we can see it. Colleagues, can you see? Please give us a thumbs up. Okay, they can see, they can hear you, Ozino.
Thank you. Morning, colleagues, and thank you for the opportunity to present to you today. I'm going to deal with the audit requirements obligation as provided for in the PPA Property Practitioners Act, particularly dealing with Section 54 and Section 55. In terms of the audit requirements, the new Property Practitioners Act has come up with a number of concessions, as one can compare it with the previous Estate Agency Affairs Act. The PPA is more progressive in terms of making sure that it protects the consumers. However, on the upside is to ensure that by protecting the consumers, there are certain obligations that are placed on the property practitioners to ensure that protection. So in terms of the outline, this is what I'm going to deal with. The presentation outline, I'll deal with in general audit requirements, but specifically I'll touch on trust account, financial statements, accounting records, and interest earned on trust account. So by way of introduction, if I've already mentioned that the Property Practitioners Act has created a number of obligations, mainly to ensure that we have professional property practitioners, but particularly and importantly to ensure the protection of consumers and also promotion of public interest. You'll also note that the audit requirements will apply to all property practitioners, including those in terms of the new subsectors. We know that we have about 12 subsectors, which will include estate agents, managing agents, auctioneer, business brokers, employee attorney, mortgage originator, and the rest. So in total, we'll have about 12. So these audit requirements apply to all. There are also exceptions where one property practitioner is applied for an exemption. So in terms of the Property Practitioners Act, we have Section 4, where a person can apply for an exemption from any other provisions of the Act. So we also have Section 23, where a property practitioner can apply for an exemption from the use of a trust account. So I'll deal with that as we go. Okay. I'll then start off with the trust account. And also to mention that, as Naledi has indicated, we had started with the webinars, I think around March, as Naledi indicated, and there was one that was provided or was done by Thomas. Thomas is the audit compliance manager, and he did a webinar, I think, around trust accounts. But with me, just to reinforce or reaffirm what he actually provided for me. All those recordings of the webinar, including this one, as Naledi has indicated, will be then found in the YouTube. So with regards to trust account, the trust account, we actually looking at the provisions of Section 54. I just want to take you through what the provision says. As a new property practitioner, for example, you will be required to open a trust account in terms of Section 54.
Osino, sorry to come in there. I'm getting a lot of charts. They can't see the presentation. They can hear the sound. Maybe if we can stop sharing and we share again, maybe if we can refresh, let's try so we don't disadvantage.
Okay, my apologies. Let me just stop sharing and then share again. I have started sharing. Naledi, can you please confirm for me?
Yes, on my side, I can see it. Colleagues on the charts, can you see the presentation? Okay, there's thumbs up. They can see. We can continue from slide 5, Osino.
Perfect. I'm on slide 5 now. I think it takes a little bit of time. Can we see slide 5, colleagues?
Yes.
Okay, perfect. I was saying that we'll deal with the trust account now. As a new property practitioner, one of the requirements of the Act is that a property practitioner business, they will require to open a trust account. So Section 54(1), it says that a property practitioner business must open at least one or more trust accounts. And that trust account must make reference to Section 54(1). And this is very key important requirement, that a trust account is a sacrosanct account which can only be used to receive trust monies. And what we also see is that the trust account, in terms of the Act, is actually defined in the Act, what monies actually qualify as a trust account. So in terms of Section 54(1), as a property practitioner business, you are required to open a trust account. I'll also talk to the exceptions. Exception is where a business property practitioner has applied for an exemption in terms of Section 23(2). So once we have now opened a trust account, the trust account must be correctly designated. It must make reference to Section 54(1). So when you go to the bank and open a trust account, obviously the bank, you have to indicate to the bank that it must have the correct reference. The reason being that, like I have indicated, that the trust account, you cannot put monies that belong to the business, or you cannot transact out of the trust account. That is why I said it's the sacrosanct account. So once now that the trust account has been opened, any monies that has been received either by the business itself or the employees must then be paid into that trust account. Where now the business owner or the property practitioner is of the view that these monies that have now been received in the trust account are not immediately required for any purpose. Therefore, the property practitioner can then invest this money in an interest-bearing account. And this is then provided in terms of Section 54(2), I beg your pardon. Section 54(2) allows you then to invest the money that is not immediately required, and so that it can also generate or accrue interest. So as we open this trust account in terms of Section 54.2, it also must be correctly referenced. It must be referenced in terms of Section 54. And this is quite important also to make sure that it's distinct from Section 54.1. So this is where now, as an inspector, because I'm also heading the inspections department, those are the requirements that will look at your trust account. How is it designated? Is it designated in terms of Section 51? Is correctly referenced in terms of Section 54.1? And if you have a one which is open in terms of interest-bearing account, is it correctly designated in terms of Section 54.2? Now, where now the property practitioner has all those monies in the trust account, either in terms of Section 54.1 or Section 54.2, those monies must remain in that trust account until the property practitioner has been requested in writing to make payment in respect of those monies, or either the property practitioner is lawfully entitled to receive those monies. And this is also important to ensure that the trust monies of clients are kept, and that it also limits instances where there may be temptation in using the trust monies, which thereby will lead to claims against the fidelity fund. So the Act also make it an obligation to say a property practitioner, once the money is there, can only withdraw or pay over the money when they are lawfully entitled to do so, or when they are lawfully instructed in writing to make those payments. What is also required in terms of the trust account is that the property practitioner is also required to keep separate accounting records. If you see the legislation under definition, it defines what is accounting records. Accounting records from the PPA perspective, it includes monies that belong to, accounting records includes records of monies belong to clients. It will also include the records of assets and liabilities. It will also, from a business transactions or business perspective, it will also include income and expenditure. It will also include general ledger and subsidiary ledger, or any other book or record that represent the transactions that the property practitioner entered into. So it is important that all the trust monies that are received, they are also supporting documents in the form of accounting records. This will also assist the auditor as they now will be preparing an audit at the end of the financial year. What is also need to be noted is that these accounting records is that they must be balanced on a monthly basis. And this is another obligation for the property practitioner in preparation of the audit at the end of the financial year. What also we have found as we conduct inspections is that the bank charges, we know that the bank will always impose or levy bank charges. In terms of the legislation, the bank charges must come out from the business account. The bank charges must be diverted from the business account and not be charged against the trust account, because this will be contravention of the PPA. Administration of the trust account. This is what I have mentioned earlier on. In terms of administration and record keeping, it means that now you have record keeping in terms of accounting records, you have bookkeeping system in place, but these systems, insofar as you now administer the trust account, must this information, all this pertinent information must be kept in a bookkeeping system that will be easily available or easily accessible, and they can either be saved or recorded in a digital format or in a manual format, as long as the property practitioner will be able to read and understand and have also easy access in terms of the recording that they do. I just want to maybe just to give you a idea in terms of what happens internally from the PPRA perspective once we receive the audit from the auditor after having audited trust account. So a property practitioner would then probably, as I've indicated, will have a record of the accounting records. They will have been balanced on a monthly basis, and all this information will be shared with the auditor after the financial year for the auditor to prepare an audit report. The auditor, it will be an auditor who's registered with the IRBA, which is Independent Regulatory Board of Auditors. And we normally receive the list of registered auditors from IRBA in terms of making sure that only registered agents are able to access our audit portal. So the registered auditor will then validate themselves by registering on the portal, and thereafter they will complete the audit using the format as provided for in the portal, and thereafter then they will submit through the portal. And this is the submission on behalf of the property practitioner. You'll note that in our Act, the Act does not refer to an auditor, but for the purpose of practicality, is that the auditor will then submit on behalf of the property practitioner. And also what to note is that in terms of the Act has provided that where the audit report is not submitted within the time limit, meaning after the financial year, then you count 6 months, and the audit report has not been submitted. The Act allows the PPRA to charge a penalty of 20 rand per day, and for a period of 3 months, and thereafter a compliance notice will be issued in an amount of 25,000, and this is the regulated amount. It's been prescribed in terms of Regulation 36. So just to caution the auditors as well as the property practitioner that please ensure that your audit report is submitted on time, meaning at least after 6 months of the financial year, and at least the 20 rand is not a bad amount if you calculate it for a period of 3 months, if maybe it has been delayed. However, let's try to avoid a situation where then we have to issue a compliance notice and then a property practitioner is fined an amount of 25,000. I'll then deal with the winding of a trust account. The Act provides about 4 scenarios in terms of which a trust account can be wound up. One of them is where the PPRA refuses to issue a fidelity fund, for example, where a property practitioner on application, they have not complied with all the requirements as required for registration of a company or for registration. And therefore, the PPRA refused to issue a fidelity fund certificate. And number 2 is where now the fidelity fund, the certificate has been withdrawn because maybe the matter was before the adjudicator, or the fidelity fund has lapsed. And the third one is where now the property practitioner has ceased to operate, have now said, I'm no longer operating, or either I'm taking a break. And the last one is where now the property practitioner is disqualified in terms of Section 50. Section 50 outlines all the disqualification requirements. And all this is where now the property practitioner, in terms of the Act, is required to wind up their trust account. What is key also is that Section 54(9)(c), that is where now the property practitioner ceases to operate. What is the requirement? In terms of the PPA, is that the property practitioner must obtain a written consent from the PPRA, meaning they will have to notify the PPRA that they are now ceasing to operate, and also notify the bank that they are now ceasing to operate, so that no monies may be withdrawn from that trust account. The PPRA, where there are monies in the trust account, will issue a written consent to say that the property practitioner can then close the account. But with that consent, the PPRA will then request a list of all creditors that are entitled to receive these monies that are held in the trust account. So the property practitioner will then provide the PPRA with a list of creditors, the names of the creditors, the amounts which are due to the creditors, and the reasons why the property practitioner believes that these amounts are due to this particular individual. And normally this process is also handled by the auditor, because you want to request the auditor to submit a winding up report. And when the distributions of monies are done to the relevant or to the lawfully owners of these monies, where the auditor now submits the audit report, the auditor will then include the list of creditors and also an explanation in terms of how the money was distributed. And this is quite key, especially where there are monies involved. But where the property practitioner, there are no monies involved, there are no trust account involved, they will have to notify the bank, get a letter of closure from the bank, and also send us a winding up report, and thereafter the company will be closed. In terms of the financial, you will remember that we have two ways of reporting for PPA. There is where now you submit an audit report in respect of the trust account, and also the trust account that has been audited, and also in terms of the financial side of the business, you're looking at the financial statement. And there, where a property practitioner has a trust account, and therefore they are also required to make sure that their financials are audited. And those financial statements are audited by the very same auditor. However, once they have been audited, they are not required to be sent to the PPRA unless the PPRA has made a formal or a written request that the financials be submitted to the PPRA. So this can also be requested by the PPRA inspector when they do an inspection, so that they can also assess the financial statement or the audited financials. However, in terms of Section 23(1), provides that where a property practitioner has an annual revenue below 2.5 million, their financial statements can be reviewed by a registered accountant. So in this case, you are not required to audit the financial statement, but you can use the service of a registered accountant who can then subject your statements into an independent, which can then be independently reviewed. So it's an independent review that will be done by a registered auditor. And also, this particular provision apply to a property practitioner who has also applied for an exemption from a trust account. I want us to be able to also distinguish between an auditing of a financial statement and also an exemption from a trust account. So an exemption from a trust account meaning that you will not be required to keep a trust account. However, your financial statement also needs to be reviewed by the registered auditor so that they can provide an independent review. I just needed to make that type of a clarity. Then, just in summary, is to say an annual financial statement of a property practitioner as it relates to the business of the property practitioner activities are performed should be audited annually, or if PP is turnover is 2.5 million, then we are expecting to have an independent review in accordance with Section 23(1). So basically, that's what I'm saying. Now, in terms of the duties of property practitioner in relation to accounting records, I think I have touched on this one. And this is quite key, and this is what we find as we do inspections to make sure that the property practitioner has kept sufficient information that will reflect their assets and liabilities, their income and their expenditure, and their general ledger or any other information or any other record, so that the PPRA inspector or even the auditor can be able to provide an audit after a period of 12 months after the financial year. So it's quite key that when we have our transaction, the records are there as well. And one of the requirements in terms of the Property Practitioners Act is Section 55, which says that the property practitioner with this particular record, they must be kept for a period of 5 years. So you'll have to keep all this record for a period of 5 years, and also they must be kept at a particular address. So when we come and do an inspection, we then require that let's see if they in this particular office, do we have all those documents? Can they be presented to us? And has the documents been kept for a period of 5 years? And that there is easy access as well. Should we require those information, or should any person require that information? So in terms of record keeping, it's 5 years. It must be kept at the registered office at least, and the records must be in such a way that a person can be able to understand them easily and be able to do an audit report at a financial year end, or even come up with an audited financial statement or independent report. Now I'll come to interest and on trust account. And this is also something that I think is quite important to deal with interest that has been received, and also to provide guidance and in terms of how to deal with interest. If you look at Regulation 34.2.1.9 in terms of the Code of Conduct, it says that a property practitioner will disclose to the parties in terms of to whom is the interest payable. So the parties must agree in writing in terms of to whom the interest must be payable to, and this is provided for in the Act. If there is no such a mandate, and the money, therefore, it means it must be paid to the PPRA in terms of this regulation. However, the PPRA, I think at this point in time, we are aware as a property practitioner, as PPRA, that there's a number of deficiencies within the legislation or ambiguity within the legislation. So the property practitioner, the PPRA, has issued a practice directive that deals specifically with interest in order to guide the property practitioner how to deal with interest. Normally, the PPRA will receive a certificate from the bank, which is a certificate that declares the interest that has been earned by a property practitioner. So that certificate will be provided to the PPRA. Once the PPRA receives that certificate and the audit report has been received, which information should also appear from the audit report, because the auditor will have view in terms of the amount of interest. It will then be assessed or evaluated by the audit compliance. And where there is interest due to the Fidelity Fund, that information will be shared with our finance department, and the finance department will then issue invoice in terms of the interest that is due to the Fidelity Fund. So going back to the practice directive that was issued by the PPRA in order to provide clarity, because there has been inquiries in terms of what interest is due to the PPRA. Is it 100%? interest that is due to the PPRA where there is no mandate, or is it 50-50 split? So we needed to provide clarity in terms of that. So that practice directive was then issued to say that in terms of the PPRA, and based on the fact that there is that legislative ambiguity, we needed to address this, that the interest that will be due to the PPRA where there is no mandate, it will be a 50-50 split. So the 50% therefore will be due to the PPRA, and then the 50% will go to the property practitioner in this case. And I've also mentioned two types of interest that one can have from a trust account. We have those interest in terms of Section 52, where there is a mandate. In some cases, there are no mandate. And also there is interest in terms of Section 51, where we've just received the monies that has to be paid over to the landlord. And during that period, maybe before payment, the money accumulates interest. So that is what we are referring to when we talk to interest. This is where now I'm talking to, I think I've just touched on the practice directive just to give clarity and also enable property practitioner to move with a common understanding that the 50-50 split is applicable as provided for in the directive. The 50% will go to the fidelity fund, and also the 50% will then be kept by the property practitioner. And I think that is quite clear. Now I'll talk to the compliance notices, and this is compliance notices flowing from the audit reports, and the reason why compliance notices are issued. They are issued based on the regulations that are provided for Regulation 38. The Regulation 38 also provides for the fines, which according to the legislature is commensurate to the seriousness of the non-compliance. If we look at the Regulation 38, it provides a particular non-compliance or a contravention against a particular fine. So this has been predetermined, or basically has been prescribed for the PPRA and the property practitioner. So we had inquiries in terms of what happens if I receive a compliance notice and I have a proof of submission. In that case, we ask that can the property practitioner then request the auditor to resubmit on the audit portal, and thereafter, once they have resubmitted, they can just send us a proof that they have submitted, and this will be handled by the audit compliance department. The submission will then be reconsidered, and once it has been reconsidered, audit department will then notify the inspections and finance department to cancel or withdraw the compliance notice. And where we have received a statement and invoice, obviously those the finance department will then pass the credit note. And there are also circumstances where the property practitioner may have received a compliance notice, but there was an error on the part of the auditor. In that case as well, we request that the auditor resubmit and correct the mistake, and also explain the reason why the original had to be corrected. So that we can be able to understand. This then will be considered or reconsidered by the audit compliance department, who will then notify the inspection department, because the inspection department would have issued a compliance notice. And the inspection department will then, upon receipt of this information, will then withdraw the compliance notice and notify the finance department as well to issue or to pass a credit note, so that it doesn't reflect as monies owing to the property practitioner. So it's quite important that when you receive your compliance notice, it may be PPRA's fault, or either it may be the auditor's fault, and that can also be corrected, and possibly then when all relevant information is received, and then the compliance notice can be then withdrawn. And one other request that we have also received on inquiry was that once now I've received a compliance notice and a property practitioner acknowledges or agrees with the compliance notice findings or information that is provided there, and then the property practitioner will then ask for a reduction in fine. And what is the position currently is that once the compliance notice has been issued and the fine imposed, unfortunately, it cannot be reduced. The fine cannot be reduced. And also, the PPRA is not in a position also to extend, I beg your pardon, to extend submissions of audit report. But what the PPRA has done already is to ensure that they put in place a payment plan. So where the amount a property practitioner is unable to pay the full amount that is due, there is a payment plan of up to 24 months that can be provided to the property practitioner, and all the inquiries can be sent to that email that has been provided for in the presentation. This is just a summary. I just didn't want to repeat what Thomas Makupu had done, the audit compliance manager, in our earlier webinar, which can be found on the YouTube, as Naledi has indicated. But I felt that it's necessary to sort of like give just a summary or overview of trust account exemption. The trust account exemptions are provided for under Section 23, as I've indicated, and what will then be the requirement or the procedure to apply for a trust account. So, for example, if it's a new property practitioner, we are just required to submit an affidavit. The affidavit is also on our website, and also if you look at the Act, there is a template there of the affidavit that a property practitioner can complete. And if you are then an existing property practitioner, you then also required to complete the affidavit. You also required to provide a disbursement of trust monies that have been held. You also required to close your trust account, to provide a winding up report, and also a letter from the bank to say that the trust account has been closed. So this is the letter that the bank will confirm that the trust account has been closed. In cases where property practitioner wants to use the service of the payment processing agent, and this is one of the sub-sectors or new categories, in that case, the property practitioner doesn't want to hold any trust monies anymore, and they can then appoint the service of the payment processing agent. In that case, you complete an affidavit, you provide a letter from the bank to confirm that the trust account has been closed, and also we want a winding up report, and also that any monies have now been paid over to the payment processing agent to deal with it. And the last column there, it deals with monies where the property practitioner is the managing agent. So you'll see that we still need an affidavit. We still need to make sure that the disbursement of trust monies has been done in accordance with the Act. We also need confirmation that the current trust account that you have has been closed. We also want a winding up report, and also a letter from the body corporate to confirm that in terms of Section 21(4) of the Sectional Title Act, that the funds of the property of the body corporate will be deposited in their trust account as opened in terms of Section 21(4). So this is just in a nutshell. I know that Thomas has dealt with exemption extensively in that webinar, and therefore I didn't want to repeat that. So in terms of our contact details, these are the contact details which the property practitioners can make use of it. The audit compliance, that is where you can send inquiries. For inspections, where there's a query about compliance notices, then you can also send it to compliance notices. and also in terms of payment arrangement or payment plan or letters of demand that a property practitioner may have received, you can then send it to the debt collection email address. Naledi, I think this is the end of my presentation. Thank you so much for the opportunity.
Thank you, Osdineo. We see the hands, we see the questions on Q&A and chat. We will deal with the questions after. Osdineo, you have a lot of questions. Please stay in the meeting. We will do the questions after. Miss Elise Leroux, are you ready for presentation? Can you please flag it for us? Let's go through it. Osdineo, you may stop sharing on your side.
Okay, thank you.
Good morning, everyone. Wow, that was so informative, and my heart goes out for every property practitioner that has to comply with all those things. So really, that was absolutely amazing. Thank you. So today I'm speaking about something, and I think this is something a lot of people are going to say, oh, but we don't deal with rentals. We don't need to know about evictions. And the actual fact is, even if you deal with sales or buying a property on auction, evictions can always play a role. But the approach that we are going to look at is more on the rentals side. And from my slide, I know it says property practitioners and tenants, but it's similar is applicable to any landlord. And we want to touch on it and make it as easy for everybody to understand. So from just a bit of a background in my approach, although I've been an attorney and argued a lot of evictions, from Expella's side, we had the opportunity to deal with a lot of agencies and tenants ourselves. And what we realized is when I did training as an attorney, it doesn't always help property practitioners because, let's face it, that's why you have attorneys and they need to deal with it. But as a property practitioner, you need to know enough because you are the specialist. And I hope that is what we're going to be able to help and tell you today. So evictions. Evictions are governed by the Prevention of Illegal Evictions from an Unlawful Occupation of Lands Act. Wow, what a mouthful. But everybody knows it as the PI Act. And this act is not one-sided. I know a lot of people usually say to me, but at least it's just in favor of the tenant. It's not. It shows the process. And what we've seen is if you deal with an attorney, we've got 22 attorneys nationwide that deals with evictions on a regular basis. Eviction can actually run very smoothly. Yes, I say very smoothly, but it's not going to be as fast as you hoped. And the reason being is, firstly, the only place that you can get an eviction order is from a court. What is important to note is you cannot get an eviction order from a tribunal. I know a lot of people go to the tribunal and sometimes there's an agreement. You know, they do a mediation. They say you have to pay X, Y, and Z and you will vacate the end of October, for example. But the big thing that you have to remember is that is just an agreement. Yes, after that period, if they don't pay, you take that order to the magistrate's court and you can actually go and attach their goods. But you can't use it to evict them because there's a specific process that was set out in the PI Act as to how an eviction should be dealt with. So at most, you will attach that order to your eviction application when you go to court, and that will assist you. The other thing that I sort of want to say about eviction is, remember, the landlord pays for the eviction, not an agent. A lot of agents sometimes, you know, it's very easy to go, well, we'll sue them, we'll evict them, or we'll do this, or we don't need solutions because, you know, my properties do very well. But the thing is, yes, that's why the property practitioner is there. But at the end of the day, if something goes wrong, all of the agreements are very clear. It's going to be for the landlord's account. And I think evictions, it's almost like a swear word. A lot of people don't want to discuss it or even think about it. And I think it's super important that we know that evictions can happen. Most evictions, and I mean, we deal with, that's Expella's core business is breaches and evictions. Most of the evictions and the breaches we deal with was never anticipated. I mean, we have people that looked perfect when they passed the vetting. And despite the best vetting, things happen in life. Yes, COVID was a good example. Nobody anticipated that. People lose their jobs. Worst things is divorces. Divorces have a serious impact because they fight and then one party vacate and then, there's issues, death. So there's so many things that can happen. And I think one should change our approach, our feeling about the eviction process. Now, the other thing is, and I get this often, please, it's urgent. We need to evict them today. Unfortunately, if you look at an unopposed eviction, what that means is the tenant is not fighting the matter. Now you say to me, Elise, why would a tenant fight an eviction? Because they can. They only need to oppose the application to delay the process. And remember, only when it gets to court, a fundamental process, then they will look in and see if there's any grounds to defense. But what it happens automatically is the moment they defend an application, it prolongs the legal process. And I'll get to that just now. But an average unopposed eviction takes approximately 3 months. And nationwide, it can vary anything between 20,000 Rand and 50,000 Rand to 100,000 Rand. So evictions are timeous and it is expensive. And I think that is why it's always so important to make sure that we do absolutely our best to try and prevent evictions. That's really what Expella's core business is. Now, if you think about an eviction and you say, Elise, why are you saying an eviction takes 3 months? There's only one legal way to do this, and it's to evict somebody, and it's with a court order. Please, I know people are tempted to cut electricity, lock doors, move in, remove doors. I don't know. People get very creative. I usually laugh and say the Lani people are stopping access in the complex. People don't do those things. It's not legal and it can actually prejudice your case. I was many years ago involved in a case where the owner, that was a developer, went and used a TLB to remove the roof because they actually wanted to demolish. At the end of the day, when that eviction was heard in court, it wasn't about whether it was the owner, the entitlement or anything. It went about the fact that the landlord took the law into their own hands. And that's something you never, ever want. So if we now go and say, what does an eviction entail? Well, it starts with the letter of demand. The letter of demand is so super important. Property practitioners, you are the ones that's in control of this. If you're managing your own properties, that's the start of the process. Now, there's always been different minds and it depends on where you get your training. As an attorney, I used to say your letter of demand goes full force, very aggressive. It must make you shake in your boots. But on the other hand, I think we have to rethink about it. It's a start of the process. A lot of property practitioners are too scared to send the letter of demand because we all know it's like, you're launching a rocket and at any time somebody's going to come back and they're going to fight with you because how dare you send a letter of demand? It's the first time they missed their rent. Or how dare you send a letter of demand? They're not even 7 days late. By the way, there is no such thing as a 7-day grace period. So, property practitioners, people managing their own properties, please try and send out your letter of demand no later than 5 days after the due date. Now, the reason I say 5 days, no, it's not regulated, it must. It's purely what we've seen in the business is it allows the money to reflect in the account of if it was supposed to due on the 1st or payment should have been made on the 1st. And it gives you time to recon and make sure that the payments reflect. Also, you don't want to send it too late. If you send it too late, you run into the next month. And in most cases, it is regulated by the CPA, the Consumer Protection Act, and you have to give the tenant 20 business days to remedy the breach. So you don't want that 20 days to run into next month because you know what's going to happen. Now, instead of paying rent in advance, they're going to start paying rent in arrears. So send it ideally not later than the 7th of the month, but that letter goes out. And the style of the letter, I mean, it doesn't have to be as threatening. For Expeller clients, I say, for example, use a simple letter. It must just comply with the essentials because you want to start the process. You are in breach. You have to pay this amount within 20 days. If you don't, we can cancel or sue you. That's in essence what needs to happen. You don't have to add additional, I want to say, threats, because also what we are aware, there is a relationship and people act in embarrassment. Hey, if you forgot, or maybe you are struggling a bit and you get a very threatening letter, it can put a bit of strain on the relationship. So in the past, people will get threatening letters and they will pay. I think the new generation and the fact that people have access to information, they are rather willing to fight back and, I don't know, just fight. So keep in mind the type of letter of demand. There's a lot of letter of demands out there available from various systems. The good news is if you're an Expeller client, if we receive a letter of demand, we'll always check and make sure everything is in place. But that's the first step. You'll see second step is cancellation of a lease. That means you can't cancel the lease already in step 1. You can't, even if you say, listen, if you don't pay in 20 days, the lease is cancelled, you're not going to get any further notice. No, on day 21, not at 5 o'clock on day 20 or 8 o'clock on day 20, on day 21, business day 21, you can send a cancellation letter saying you have not remedied your breach in terms of the letter of demand within 20 business days. Accordingly, the lease agreement is cancelled. Now, I just want to add here, and I'm referring specifically to letter of demands where the CPA is applicable. If it's a month-to-month lease, I'm not going to go into that because it works differently in different provinces. So for today's purpose, I'm just going to deal with the 20 days later. So when you cancel, the lease agreement is cancelled, and now you have the option to tell them when to vacate. As an attorney, I always love to say, please vacate immediately. But let's be honest, most people won't be able to vacate immediately. Yes, we always tell the tenants, but we've been telling you in this 20 days that you need to vacate by that day. But not all matters are being managed that way. So what we usually suggest is if you need to cancel the lease agreement on the 25th of the month, give them until the end of the month to vacate. Or if you have to cancel on the Friday, give them until the Monday to return the keys. So you have a bit of leeway, because we do see that also when you do the cancellation letter, tenants really do come to the party. And it is important to note that, don't just, if they pay, because I see tenants do this, they suddenly pay and they think the lease is reinstated. You have two options after you've cancelled. Yes, if the money was due for last month and they paid last month, you can take the money. You will say to the tenant, thank you very much for payment. Please note the lease agreement is still cancelled and you're still required to vacate. Or, thank you for the payment. You've paid all of your arrears. The landlord is willing to reinstate the same lease, but you'll need to sign the addendum, or to make sure that the lease agreement that was cancelled is actually a reinstatement. Just payment does not reinstate the lease. Very, very important. And especially if it was somebody that was giving you problems and you really don't want to be in a fixed term, it's an ideal opportunity to say, we confirm that the attached lease agreement is reinstated, except that it will continue on a month-to-month basis and it's no longer part of a fixed term. That's things that is available and you can use with. Property practitioners, most of you do have access to attorneys or people that's available. Expeller clients, this is where we are there to help you. If you're not sure, please speak to us. Because if you act and you do it wrongly, you are opening yourself for negligence, because the landlord or the owner is relying on the property practitioner managing his property to do everything correctly. So that's the very, very important thing. The other thing with step 2 is before you jump and cancel, please have the discussion with your owner. If your owner does not have the money to proceed with an eviction and it is left, in terms of the PI Act, you have to start with your eviction within the first 6 months that the tenant is in illegal occupation. So what happens is if you evict in this 6 months period, I only have to inform the municipality that we are proceeding with an eviction. I personally think they get the notices, they put it in file 13 somewhere on a heap, because they know most of these things they not really need to be involved in. But in terms of the legislation, they need to take account of it or take note of it. But if a person is illegal for longer than 6 months, then we actually need a report from the municipality. I've seen matters that people are waiting 2 years for a report from the municipality. So you are going to prejudice your landlord if they're not able to proceed and you allow somebody to be in the property illegally for longer than 6 months, especially with lease agreements. So I have the discussion with them. If they don't have the money with an eviction or, the attorneys, then please discuss the way forward. The other thing is also when you cancel, please go look at your mandate, because I'm sure most rental agents' mandate is linked to a valid lease agreement. You will manage this lease agreement. If that lease agreement is cancelled, you don't have any authority and you're definitely not entitled. I mean, there's going to be a question whether you're entitled to your money because your authority or your instruction has actually been ended. So also make sure when you continue, because I see a lot of property practitioners working very hard and they never get any money. So keep that in mind. Now we start with the legal process. I want to jump to this page just quickly. So what we've discussed here quickly, and we are going to share the slides. I just split it in two. What I'll do is I'll also share this flow that you have that in one and not in two halves. You can start with the legal process. Now, the legal process can happen in two ways. You can issue an application, which we at Exfellow and most attorneys use because it's much faster than issuing a summons. So in your eviction application, we only deal with the eviction. We don't claim any money. Okay, so it's clean. And what we need to prove is who's the owner, why are they entitled to cancel, and if the person is in illegal occupation. We have to address certain things. You will address the vulnerable people. That means women-headed households, children, disabled people, and elderly. I just want to add, these people does not mean you can't evict them. Because I've even heard a property practitioner saying, oh, I'm not going to pick any of those people to place in a unit because then you can't evict them. No, you can. You can evict them. The big difference is, think about it. If you have, for example, now we're going into November, December, courts are not going to order an eviction order to be executed or, people to vacate over November if there's a grade 12 in the house. You're going to prejudice that child. Nobody's going to be evicted over the 25th or the 26th. You don't evict a child or people with children over that period. You're traumatizing them. And remember, evictions is a human rights matter. Yes, the owner is losing financially, and that puts other pressure. But here you're talking about putting a family on the street. Also with disabled people, I mean, you can't have somebody in a wheelchair to go move to a third floor building if there's no lifts. So they just take those things into consideration as to how long they need to vacate. Most courts grant a tenant about a month to vacate. So over and above that, it takes 3 months to get your order. They additionally give them a month, maybe 2 months. For example, if I get my order now in the middle of December or on the 10th of December, that most probably will be granted until the middle of January, worst case scenario, end of January, because they're taking the schools into consideration again. So overall, very bad time for evictions this time of the year. Okay, so you start with this process. This is your main application. set out everything, and you serve it on them. Now, because this is a human rights issue and it has such a big impact, the legislature has elected to say, a normal court case, you have your application, you have your court hearing. But with an eviction, there has to be an additional step. So we call this the ex parte, which in Latin just means without the other party. It means you go to court without your tenant, and you go to court and you say to the court, court, my eviction application has been served. Here's my section 4.2 notice. Now, this is actually physically the section 4.2 of the PI Act, which stipulates that the tenant has to get notice again of the eviction. So it sets out basically saying, dear tenant, we are proceeding with the eviction. This is the eviction date. You have the right to oppose it. You have the right to an attorney. If you don't come to court on that day, we will proceed to get the eviction order granted against you. This is a very quick process, but it has to happen. This is why it causes a delay. You must probably, when you issue your application, you must probably only going to get a court date within 6 weeks. After that day, after the ex parte, we go directly to the eviction hearing. Those orders has to be served. After service, it has to be set down, and it has to be set down at least 2 weeks before the hearing date. So even if you wanted to cram everything, I mean, the quickest eviction I ever had in my life was 21 calendar days, and it's purely because that court combined the ex parte and the first application. They don't do that anymore, except in KZN. So now it's a three month process before the hearing of the matter. Additionally, if you see here on the side, that's when it gets opposed. The moment they file that notice of intention to oppose, it stretches out the whole application process. And that's where a lot of tenants actually look at. So when they go to court, the court, if your papers are in order, I mean, with the expeller, we have 100% success rate nationwide. All our eviction orders are granted because it's done correctly. Then the court will say, okay, you have to vacate, for example, on the 31st of October. If you don't, then the sheriff can be authorized to come and evict you on the 1st. Now, the first thing of what I love about an eviction order, you can execute it. I mean, if you get a money judgment and the people don't have money, there's not much you can do about it. I mean, you can attach their goods, but most goods are going to cost you more to attach and sell. You can't force them to pay if there's no money. But with an eviction order, you can actually send the sheriff who go in physically. They cut the locks, they open the door, and they take the people out of the unit. For the sheriff to do that, they need a warrant of ejectment. Now, I also want to sort of what is important, especially for owners and property practitioners. If the court order says they have to vacate on the 31st of October, please don't go place a new tenant for the 1st of November until we are all super sure the tenant is vacating. Because a lot of agents want to start advertising. Now, firstly, if you are evicting a tenant, that tenant is not going to allow you access to the property. And to go to court to force access is going to take longer than just the eviction. In any event, if you walk in there, that tenant is going to tell the worst things to your new potential tenant. So you sort of want to keep your new tenant away from the tenant you are evicting. So please keep that in mind. The second thing is, on the 1st, if the tenant didn't vacate, the warrant of ejectment and indemnity is going to go to court. It has to be issued. Some courts issue immediately. Some courts you have to go back the next day. So now we're talking about day 2, for example. Thereafter, it goes to the sheriff, and the sheriff then look at his diary and see when he can go with his people to go and evict the person. So they will then, depending on the quotation and all of that, will proceed to evict. So just because the court says they have to be out on that day and the sheriff can go on the 1st, does not mean the sheriff is going to go out on the 1st. Some provinces, the sheriffs are so on the ball. I mean, I had sheriffs on standby and ready because we knew that that one tenant is going to be super crazy. So they were all prepped. So 3 days after the warrant, they went and they actually evicted the person. In some areas, we have to wait up until 3 weeks for a date the sheriff becomes available to go and evict someone. So these things are important, not because we want you to do the eviction or that you want to do a DIY, but that you know what is the expectation and what to expect and why. Because I'm an investor myself, I have my own property and I can understand the frustration. But that's why if you work with the team that you can trust, despite the fact that this can feel like it goes forever, it should not. You should be able to know that everything is in place. So that's the eviction process. But what is the most important thing for a property practitioner to know? Firstly, please take note. If you have done everything proper and you weren't negligent, proper vetting and everything, the eviction is not your fault. You can't foresee what happens in the future. And I think this is important to repeat to every property practitioner out there. So evictions might be needed despite the best vetting. Okay, a lot of people are saying, but we're doing great vetting, so it's not needed. It can still happen. Please, when you take time to speak to your landlords about the mandate, authority to lease, discuss the different solutions out there. Tell them what, do they have something in place? Because rather say to them, plan A, I'm not going to bring a tenant to you which I am not comfortable in placing. So firstly, I am going to bring you the best, but we don't know what's going to happen in the future. So do you have, if we need to ever evict, will you have the funds? Don't bargain on a buddy attorney in the bar. That always doesn't go so well, but have that discussion. Show them what is the alternatives of things out there. If you refer somebody to an attorney, please make sure it's a litigation attorney. Property practitioners, I know there's a lot of conveyances out there, a lot of conveyances that you guys have a very close relationship with. But conveyances aren't litigation. Conveyancers don't like going to court. They don't like fighting in court. So please get a litigation attorney. I know a lot of property attorneys, firms that do conveyancing and litigation. So please get the litigation attorney on par. And then the big thing is, I know there's a lot of pressure on property practitioners to get the money, because I know a lot of landlords, on day 2, they need that money to pay their bond. But when you speak to one of the things we do at Expello that we've always see has been working, in our first conversation with the tenant is also always, why have you not made payment? If somebody has lost their employment, and this is a real fact, if you look at the increase in defaults, please rather have the conversation with them and say, listen, can I not rather assist you to find a more affordable place within your budget? That is going to help the tenant and the landlord if that tenant moves. Because otherwise, they're just going to borrow money and to keep you off their back this month, but next month you're going to have the same problem, and it's going to escalate. So open that. I know you are having a lot of pressure. Good news again, I want to almost say that's why it's important to know what is in the market. So I've referred quickly to Expello, and just to say our biggest approach with Expello is breach management and eviction prevention. So all of that I've sort of said, make the phone calls. Why are they? Additional communication is that's what Expello offers to our property practitioners and our landlords. We use those 20 business days proactively to try and prevent an eviction. The reason being, like I said, we've got 25 attorneys, sorry, not 22, but 25 attorneys nationwide on our panel. They are the best. But they are also reliant on the courts. And the courts we have no control over. So if we can prevent, whether it means I need to arrange a moving truck, Expello pays the tenant to vacate, we do anything legal to help them move. If we cannot, at this stage, we have a 98% success rate sorting out the breach, getting the tenant to pay or move. If we cannot do that, we will actually proceed with the eviction on the owner's behalf. And we will firstly manage the attorneys, because also attorneys are great, but they are expensive, hard to get hold of, and often their responses, you don't know what they are saying. They are trying to be so clever, and for them it's normal legal jargon. In the past, I used to say, good news, the ex parte application has been granted, the 4-2 notice will be served. It's only later on that I realized, if I convey that to my clients, they have no idea what I'm saying and why it was needed. So we manage the communication, and the best part is we will pay all the legal fees to obtain the eviction order. No hidden cost. The only thing we don't pay is to get the sheriff to go remove the locks and throw the tenant out. But in this past 7 years, it's only 0.01% that the sheriff was actually needed. We got the tenants out before then. This, for landlords, for property practitioners, you have time to grow the business. You can focus on keeping the relationship. You have that bit of a backing and protection that we offer to our property practitioners. Because if somebody fights you, you can say, oh, we didn't want to send the letter of demand, but Expello insists on it. Or, I believe your story this month again. I want to grant you an extension, but unfortunately, it's an Expello matter. We are independent. We don't know the parties. So when you have to go do an outgoing inspection, there's no animosity between you and the tenant. You can help them vacate. And I think that's a big benefit for a lot of property practitioners as well, not just the saving on the Expello, on the eviction fees. What is important that a tenant needs to know, and our people, I don't know if there's any tenants on here today, but I think something that has really been lacking is that when a tenant is upset, and we've been dealing a lot, especially if maintenance is not done. I asked all the property practitioners and owners on today, please make sure you attend to your reasonable maintenance. And property practitioner, if you've asked your owner 100 times to fix something and they're not doing it, please guide your tenant to say to them, tenant, I have asked everything from the landlord. He's not attending to it, whether it's because they're not able to or they don't want to. Please follow the breach process. You are not prejudicing your owner by telling the tenant to send a letter of demand, because the tenant is going to say, first, either you fix the door or I fix it and it will cost me 200 Rand and I will deduct the 200 Rand from the rent, or I will cancel and vacate. Because at this stage, this process is not followed, and then tenants just really stop paying the total amount. And this is much more prejudicial. I know they're not allowed to do it, but that's why I say they still do it. And this is the best way to prevent them, instead of just telling them they're not allowed to do it. If things really, especially afterwards, if there's a dispute regarding the deposit, you are not a presiding officer. Please refer them to the tribunal, that can be resolved. The good news about the tribunal is they will solve the issue before it goes to an eviction, and hopefully an eviction is not necessary. We see too often disputes are left for too long, and then by that time, everybody wants to kill everyone. This morning has been a real mouthful with regards to the eviction process and the breach process and what to expect. Please, if you want more information or want Expello to contact you, please scan here, and here's all our contact details as well to assist. And thank you very much for the opportunity.
Thank you, Ms. Leroux, for the presentation, very informative. Ms. Marasia de Robas, are you ready for your presentation to take us through before we go to the questions?
Good morning, everybody. Yes, thank you very much. Let me just share my screen. Can everybody see my screen?
Yes, we can. Please give us a thumbs up. They can see it. they can hear you.
Okay, fantastic. Good morning, everybody. I have to agree with Elise. After the presentation, the first presentation by the PPRA, I was just saying, thank heavens, I'm not a property practitioner and I'll rather climb on roofs and I will much rather deal with builders who don't know how to build. This sounds very complicated. And as far as evictions are concerned, trust me, Elise is your first call. Today I want to touch on something else, and I would like to propose a solution for property practitioners that can solve a few problems and not add to issues for you. So let's have a look at how property transactions have changed over the years. You used to be able to add something to the house, a staff room, a garage, a granny cottage or whatever, and continue and nothing happened. Then municipalities started asking for approved building plans, and the banks also started asking for that. These are two Google Earth shots from 3 blocks in Cosmos City in Randburg, Johannesburg. And on the left-hand side, you can see the 3 blocks taken in 1995, and on the right-hand side in 2022. Now, you can see that there has been a lot of activity in these 3 blocks. One of my clients wanted to buy a property, and the bank asked for approved building plans because there had been some additions. We went to the municipality and asked them whether they would approve building plans because we needed to know what the floor area ratio, the FAR and the coverage was, and will we be able to get the building plans approved. The council said, no, we will not approve the building plans that are on that site, of the buildings that are on that site currently. So my client couldn't then buy the property with a bond, and she had to save up. Now let's have a look at what happened on the site. This was the original house. Then the seller added some rooms which were being rented out, and this is what the street view looked like. So naturally, the bank wanted approved building plans, and as I said, in this case, the council said no. Why was that? That was because of the Splumer Act. And in 2020, the Splumer Act was supposed to be enforced by all municipalities. But then COVID happened and they said, okay, don't worry about it. We'll worry about it later. But a lot of municipalities have started enforcing it. They want a Splumer certificate before they will issue the rates clearance certificate. Now, what does that mean? Why do they want that? Because you have added buildings onto your property, the value of the property is more, and therefore they can charge you higher rates and taxes. So please, as property practitioners, when you get a mandate, ask the sellers for the approved building plans. I always advise my clients to make it a condition of sale because it might not be required now, but by the time they're going to sell the property, it will be a requirement. And the other thing is if the buyer doesn't make it a condition of sale and his or her bank says, we want approved building plans, the buyer has to pay for the building plans. Whereas if you make it a condition of sale, the seller has to pay for the building plans. So my recommendation, make sure that your sellers have approved building plans. Then in February 2022, the mandatory disclosure form became law. I know that a lot of buyers and property practitioners thought that this was going to solve all their problems and they were going to have smooth transactions and no issues with buyers coming back and, oh, the roof is leaking and I didn't know about this. Well, I'm sorry, but I'm here to pop your bubble that I find that about 98% of mandatory disclosure forms were completed wrong. I will show this to you a little bit later. Now, at the National Association of Building Inspectors of South Africa, we believe that the next step is going to be mandatory property inspections. Now, I know that a lot of agents do not want property inspections because it does cost you a sale from time to time. And in a lot of cases, the buyer then wants to renegotiate the price and the seller doesn't want to drop the price. And you, as the property practitioner, end up in the middle of a big bun fight. But I hope that I will prove to you that a property inspection will be beneficial. Let's have a look at some of the scary things that I have found over the years and which resulted in major problems for the property practitioners. This was the roof in an industrial, actually a commercial building, an office block. Now, this king post, which is the main post of the roof truss, started to pull out of the nail plate. Now, this is serious. When I stuck my head into the roof, there were 3 trusses next to each other where they have started pulling out of the nail plates. I got out of the roof, found the CEO, and I said to him, evacuate this building immediately. And we arranged to have props fitted under the roof trusses to support the trusses. And before the company arrived to have these trusses propped up, one of the trusses collapsed. Now, there is a law that states that commercial buildings must have their roof inspected once a year and they need an engineer certificate. So if you are selling commercial buildings, please ensure that you ask the seller, where is your roof certificate? If they don't have it, contact me. I will put you in touch with a roof engineer who can inspect the roof and issue that certificate for you. Now, what is the reason that I'm telling you this? If this roof collapses, you sell the property, the roof collapses, the client puts a claim in, insurance says, where's your roof certificate? This is what roof certificate? Nobody knows about it. Insurance is going to say, we're declining the claim. Legally, you've sold the client or the seller has sold the buyer a fraudulent building because all his stuff was not up to date. So please make sure that you get your engineer certificates for the roofs. This was quite a sad story. It was a maintenance inspection I did for a client. And as I climbed into the roof, I saw brand new under tile plastic. And you can see that this roof tile was scorched. And on the ceiling, we had all the old burnt plastic. I asked the new homeowner, when did the roof burn? He said, what do you mean roof burned? He phoned the estate agent and asked, when did the roof burn? She ummed and awed and, oh yes, I think there was a fire about 5 years ago. And this was not declared to the buyer. The seller was living in East London, in New Zealand. Through the transferring attorney, we got hold of the seller's bank and the insurance company and asked them how many roof trusses that they authorize for replacement in this roof. Because in my opinion, there were 3 roof trusses which should have been replaced. The insurance company had authorized 7 roof trusses to be replaced, but only 4 had been replaced. Luckily, they sent the contractor out and this client got the correct number of roof trusses replaced and we got the roof cleaned. But had he not asked me to do an inspection and those charred roof trusses collapsed, he would have been in trouble. And the fact that it was not declared to him would have been a problem. But this sale took place before 2022. Now, this is my pet hate. Damp is the biggest problem in South African houses. And I'm sure that every single property practitioner has seen walls that look like this. Now, I cannot tell you that almost every single mandatory disclosure form says that there is no damp. In the last 7 years, I have found one house that did not have rising damp, and that is because they had just repaired it. And so, property practitioners, if your seller fills in the mandatory disclosure form and he says there's no damp, please go and walk around the outside of the house. Point this out to him. If the paint is bubbling like that, that is rising damp. You've all seen walls that look like this. And on the inside of the house, have a look at the bottom. Have a look in the windowsills. Have the paint started bubbling in the windowsills? I always say to sellers, rather declare that there is damp, then you will have no comeback. In this case, the seller declared that the roof was leaking at this little stoop that he added on. And he said he had repaired the roof, but he couldn't understand why it was still leaking. Well, when I climbed onto the roof, it was very clear why it was still leaking. This is not how you repair a roof leak. This was another situation where the seller declared that the flat roofs were in perfect condition, but there was one small leak under here. It's very clear why the roof was leaking. All these leaves on the roof were compromising the waterproofing, which has not been serviced in a long time. And over here, you can see that the parapet wall was not waterproof. So water was entering through all of those cracks and causing roof leaks below. I always hear flat roofs always leak. Yes, they do if they look like this. If you have grass growing in the cracks, and if you have areas that have no waterproofing, yes, then the flat roofs will leak. But if flat roofs are maintained regularly, they do not leak. Another problem are geysers that are installed like this inside old blocks of flats, normally in the bathroom or in the kitchen. Now, the issue here are the vent valves. Those little pipes on the side are supposed to protrude 30 centimeters above the geyser. So what are they there for? They literally let the geyser let off steam. If this geyser bursts, insurance is not going to consider the claim because the geyser was not installed properly. This is a major issue and something to look out for. Now, another thing that I am very passionate about is a professional snag list inspection. If you, as a property practitioner, are selling units off plan or newly built developments or whatever, please insist that professional snag list inspections are done. And if it is a complex, a sectional title complex, please tell the body corporate that they should do a professional snag list of the common property. Why? When the builder does not build correctly and you have rising damp outside the complex, who is going to pay for that? The owners are going to pay for that by a special levy, and it is going to cost a bomb. Or their levies are just simply going to increase. I recently did an inspection on a new complex, which was about 6 months old, and there was major damp already. Now, the cost to repair that damp on the outside and the passageways and everything was 3.5 million rand. That's only on 4 blocks. Now, the new body corporate, they barely making money. They barely covering all their expenses. Now they have to outlay 3.5 million rand to repair the damp. This is a major problem. And please, I'm going to bash the NHBRC now. They are not good. They do not have teeth. they have a very strict guideline in which they work. They will only assist you if the builder doesn't do the snags in the first 3 months. They will only assist you if the builder doesn't repair roof leaks in the first year, and a 5-year structural guarantee, so structural cracks. Beyond that, common properties of complexes and so on, you are on your own. This is what I have found in a few complexes. Under the zinc, there was no P-trap. The water didn't drain properly and it was stinking. But a plumbing certificate was issued, which was illegal. There were roof leaks in this complex, and I couldn't understand why. I climbed on top of the roof and realized that the contractor had forgotten to make provision for the geysers that were on the flat roof and for their pipes to go down into the units. So he stuck the water pipes and the geyser pipes down the stormwater outlets, down the gutters. So what happened? When it rained, the water had nowhere to go and there were roof leaks. This poor client had his house flooded. Have a look over here how high the water was in his driveway under the car. And it came in the front door. The garage was on the other side there. It went in the front door, in the garage, and out on the other side. So why was this? This house was brand new. The house was not built 150 millimeters above ground level. And you know what happened? Insurance declined his claim because the house was not built according to regulations. Another thing I find quite regularly, which drives me absolutely insane, is when they use concertina pipes behind the toilet. This is illegal. But in this case, the plumber had issued an occupancy plumbing certificate, and because the plumbing certificate and all the other certificates are provided to the town council, they issue an occupancy certificate. And the builder says, not my problem, I've got these COCs. So what we have done is we've reported the plumber, and I'll show you some photographs later of glass not being correct. We've reported the plumber and the glazing companies to the relevant governing bodies to have them deregistered. Glass in bathrooms must be safety glass, and glass in all doors and windows that are lower than 500 millimeters. If it's not, the glazing certificate that was issued is fraudulently issued. This is a big issue. It's a guest toilet, no window and no mechanical ventilation. That is illegal. The town council should never have issued an occupancy certificate. Balustrades that have openings that are bigger than 100 millimeters. This is illegal and a safety risk. And when a roof looks like this, the mortar has fallen out, the contractor painted the roof tiles instead of fitting black roof tiles, and the paint is already peeled. This house was 3 months old, and the client was sitting with all of these issues. There are new regulations in place which deals with energy efficiency. One of them is that the architect must do a calculation and you require insulation in the roof. In this case, the contractor did not fit insulation, but yet an occupancy certificate was issued. As I say, damp is my pet hate, and I find it in almost every single house. Geysers is another big problem, and I want to show you some really scary stuff. In this case, the client had a constant leak and dripping on the ceiling. They couldn't understand why. When I climbed into the ceiling, I noticed that the pipe from the geyser tray was never connected. Remember, the geyser will drip, then it's working properly, and the water from the geyser tray is supposed to drain to the outside. In this case, it was dripping on the ceiling. But now I'm going to show you something very special. This client also had major issues with water on the ceiling. In his infinite wisdom, this plumber created a P-trap here. I have absolutely no idea how water, which is gravity fed, must go down the P-trap and then it will travel along here, go up and out the wall. No wonder this geyser constantly dripped. And here is another special. This water from the geyser drip tray is gravity fed, and regulations require that it slopes at a certain angle to outside the roof. But this was never done. Now, when a complex is built, the roof is the responsibility of the body corporate. So when I do a snagless for the body corporate, I also climb into the roof. This is called a top chord bracing, and this at the back is a shelf. Now, regulations are very clear that this top chord bracing must be bolted to the shelf with two 14mm bolts and square washers, none to be seen, and the shelf has to be attached to the trusses on both sides with hurricane clips, 4 hurricane clips. There was nothing. So this bracing was just hanging there and it served absolutely no purpose. The next problem, and we recently had a fire in Midrand, is that you require a firewall between units. Because if a fire breaks out in one unit, it should take 30 minutes to burn through to the other unit. And the law states that roof trusses are not allowed to go through this firewall. But here we have a piece of bracing going through the firewall. So if a fire breaks out in this unit, it will use this roof truss, get through to the other unit, and there you have the whole block up in flames. Now, when you're selling second-hand properties, you think that the mandatory disclosure form is protecting the buyer as well as the property practitioner. As I said before, unfortunately, the disclosure forms are not completed correctly. I was interviewed by You Magazine when in 2023, the first buyer was successful in getting a judgment against the seller for not disclosing the dam. Now, if you have a look here, the client said that she thought it was her dream home in Roodepoort. But before the transfer went through, she noticed some damp spots, which the seller said they fixed. But once transfer was completed, she discovered the house was riddled with damp. So if a seller fixes the damp, he should provide you with a 10-year guarantee. So in this case, the sellers just scraped off the paint, the loose paint, and painted again. So the judge said, nonsense. You cannot hide behind the footstoots clause, and that the sellers had deliberately withheld knowledge of the damp. And they had to pay an amount of 414,000 Rand to cover the cost of the damp repair. Since then, there has been a lot of court cases, one like that. I have had a lot of clients be very successful in suing the sellers. This was an inspection for a client, and I want to show you this mandatory disclosure form, which was completed wrong. The client said that there were no illegal electrical connections and so on. He said there were no defects related to draining. He said there were no leaking taps and pipes. He said there was no damp problem. He said there were no roof problems and there were no cracks and issues with the baths and toilets and cisterns. All a lie. Then he said that all doors and handrails were in working order, which was not the case, and that all the buildings on the site complied with regulations, and that the plans were at council for final approval. So my clients thought, yay, everything is in order. Let me show you a few things. This was a plug in a bathroom, and there was a washing machine in the bathroom. The only plugs that are allowed in a bathroom are shaver plugs, where you can also plug your toothbrush in, or waterproof plugs. To put sellotape over a plug does not make it waterproof, and yet the electrical COC had been issued. The seller declared that there were no leaking taps and there was no dampings, there was no damp. So when I walked into the property, you walked right past this, and and I noticed this, and I thought, there's going to be damp inside. You can see that they used a plastic packet to try and stop the leaking pipe, and they packed bricks around it. Not sure if they thought I wouldn't see it. Inside the house, there was this piece of steel across these windows. So the windows couldn't open because there was a passage here with 2 more rooms over here. This was a window from a kitchen opening into another kitchen. Very illegal. These were the building plans that had been submitted to the town council. So you can see the existing outbuildings over here and all of these proposed additions and alterations. Let's go through them one by one. Number one, this door was not there, and this alley was not there. This wall was actually on top of this wall over there. So that alley was not there, and you can clearly see that the sewer line is supposed to run in this alley. I have no idea where that sewer line ran. This was a toilet. It was in actual fact a bathroom, and there was no window and no mechanical ventilation. And I don't know where the sewage pipes went. This was another toilet, no mechanical ventilation, no window. I don't know where the sewage pipes went. Number 5, again a bathroom, no window, no mechanical ventilation, and that is where that beautifully waterproofed plug was. The room with a window which couldn't open because of the bars across it was this one. It was on the plans as a dog washroom, so the council would have approved it. But in this case, this entire property was student accommodation, and a student lived in this room. The room had so much mold and was really, really not good. And then, lastly, you have this number 7, which said it was a passage with a BIC, which it was not. And this room, which they said was a hobby supply area, was actually a kitchen with a window opening up into another kitchen. So these plans were illegal, and they were trying to sell the property to the buyer. And the building plans had been drawn up illegally. The COCs were issued illegally. And luckily, my clients cancelled their offer. But the problem is that if the sale had gone through and there was an issue, or the municipality decided to come and do an inspection, and they realized all of these illegal things, my clients would have been in big trouble. And it would have been a court case to get the seller to rectify it and to pay for it and so on. So as a property practitioner, you have to protect yourself against the clients not completing the mandatory disclosure form correctly. And I do mandatory disclosure form inspections where I take your disclosure form and I go through it, where I check the building plans and make sure everything is in order. So please, utilize property inspections to assist you and to make sure that the seller and the buyer are happy. The other way you can use a property inspection is if you are struggling to sell a property. I've done inspections where there are a lot of plaster cracks. Now, plaster cracks are not serious. They're just ugly. And the seller wants a specific price and the buyers are saying, oh no, there's structural cracks and this is an issue. I go in and I do an inspection and I detail everything. And I color code my reports. So if something is broken or it's not done according to regulations, it's a red caption. That is serious. The blue captions are items which must be attended to before they become red items. For instance, the gutters are tremendously blocked. Clean them before they start rusting through. And then green items are maintenance items. Remember to cut the trees back from the roof. Clean the gutters every year, replace the silicone around the zinc. So all of that gives the buyer an overall view of the property. Now, in the cases where I've done inspections for the sellers, they have then gone away and sold the property with the inspection report. Let's say, for instance, they wanted 2.2 million for the property. They then say, listen, I wanted 2.4 million for the property, but I'm selling it with this inspection report. I'll take 2.2 million. I'm not fixing anything there. The buyer knows what he's getting into. The seller gets the sale and you have two happy clients. So please contact me, let me guide you, and let's protect everybody. Thank you.
Thank you so much for the presentation. We will go to the questions. We have questions from Osdino's presentation and also the evictions and this one currently. I see the hands. I'm going to mute so that you can ask your questions. We'll keep it short and sweet so that we can kill time. We have until 12:30. There's a question for Osdino. Annie, good morning. So we need to ask the bank to change existing names of trust accounts to refer to section 54.1 or section 54.2.
Yes, if we have, remember we had the old Estate Agency Affairs Act, and I should think that the provisions were provided under section 32 at the time. So that has to be changed to reflect Property Practitioners Act, section 54.1 or section 54.2. So that is the correct reference, because Estate Agency Affairs Act, as an example, it doesn't exist anymore. So in each and every trust account, it will then have to say PPRA reference section 54.1 or section 54.2. So it is important that you make sure that it is correctly reflected, because that is when you also get bank statements from the bank, it would also reflect that it was open in terms of PPA reference section 54.1 or section 54.2.
Okay, Osdino, I have another question from Linda. Having a trust account with PayProp, is that sufficient?
Yes, what I have also pointed out in the presentation is that it is sufficient because you have, I assume, that there was an exemption granted by the PPRA, that there was an application, first of all, to apply for an exemption, and providing us with a letter from the payment processing agent to say that they will be handling your trust monies or trust issues. And with that, you have submitted all the documents. So once you have that letter of exemption, it simply means that you've now taken the trust account environment to a payment processing agent.
Okay, thank you so much. Elise, I have a question. At what point are you allowed by law to blacklist using TPN system?
So if you want to blacklist, according to the TPN system, and I'm not the TPN system expert, but they usually require 3 letters of demands before you can blacklist.
Okay, thank you so much for that. Osdino, I have another question for you. I think you got the most questions from today's webinar. Andre, he says, when can we expect to receive invoices from the PPRA following the submissions of our audit reports? I believe 2023 and 2024 are outstanding. Osdino?
Okay. I think it will be then handled by our finance department. I have provided the details of the finance department. I think, Naledi, if I have not, can we then provide the email of the relevant person in the finance department so that those invoices can be issued?
Yes.
They will normally be sent directly to the finance, and then the finance will be able to issue those invoices. Apologies if I don't have it on my presentation, but Naledi will be able to provide the email addresses for finance people to be able to issue those finances, so that to be able to issue those invoices and statements, so that we can see what is stated there. Thank you.
Yes, and maybe you can send me an email on the email I sent presentation from, and I can reply with the details. I have another question, Osdineo, from Tanya. When can a property practitioner apply for exemption from a trust account?
Okay, at any period, there's no specified period, but what is important is to ensure that within that financial year, you submit a winding up report. So once you have then closed the trust account at the bank, you will have a letter confirming that the trust account has been closed, and then your auditor will then audit from that day. So we'll need a closing audit report, if you can put it that way. So there's no specific period, but depending on when do you want to exercise that right.
Okay, so I think Tanya's question and Bertha are the same. Bertha, I hope you are answered from Tanya's question. I have one from Johannes Osdineo. What corrections can be done if the trust account is not charged from the business account?
That is a very important question. You probably have to make sure that there is sufficient funds in your trust account, but normally the bank will agree to divert the bank charges to be charged in the business account. So you may then engage your banker to say that the trust account charges or the bank charges insofar as trust account, can they then be charged out from my business account?
Okay, thank you so much, Osdineo. I have another question that will go to Elise from Esther. What are the costs of eviction?
So it depends on the province. It can vary anything between 15,000 to 100,000. So the factors are which province, which court, and if they oppose it. So unfortunately, there's no always a set amount that one can take.
Okay, thank you so much, Esther. I hope you're answered on that one. I have a question as Elise from Ramokgetswe. How can you advise us with evicting a tenant from a sold property, even though he has been given a notice timelessly?
So I think the biggest thing is to get an attorney involved quite early on, because you cannot proceed with the eviction prior to transfer because the property is not in the new owner's name as yet. So you want to have everything in place that when the moment it happens, a transfer take, the attorney can proceed with the actual eviction process. Unfortunately, in those circumstances, make sure you have an attorney that deals with an eviction and it's on it very, very quickly.
Okay, thank you so much, Elise, for that. Marisia, I have a question from Leon. In fact, it might be a comment, approved building plans as well as the occupation certificate. Leon, if your question is incomplete, please raise your hand. I will come back to you. I'm not sure if Marisia can pick up the comment you are making.
Okay, I'll have a look.
Okay. And I have Rolene again for Marisia. Is this the old disclosure form as the new one from PPRA is much shorter? I think she's referring to the disclosure form you presented of a client who made an error on the form, but our disclosure form is in our regulation 36, but maybe you can comment on that, Marisia.
Okay, so some property practitioners have their own mandatory disclosure form. You know, it's regulated by the PPRA, what is the minimum stuff that has to be declared, and the property practitioners are allowed to submit their mandatory disclosure forms to the PPRA for approval. And that one that I showed was the one that the property practitioner signed with the OTP. So I get a lot of different disclosure forms because the property practitioners do change them.
Okay. I have another one for Ozdineo. I think coming from the chat, this would be the last one before we go to the hands. Wali, he says, who do we contact to resolve long outstanding disputes regarding the submission of audits and outstanding fines? We requested that we approach the courts to resolve, but still no response from the PPRA, Ozdineo.
Okay. In terms of resolving the issue of audits, I have provided an audit email address. The colleagues in the audit compliance are the one who will be able to resolve it. But where you have now received a compliance notice, then you have representations. Then you can send it to the compliance notice email address so that they can maybe address to your matter. You may find that we have to do an internal investigation to check what is the problem from the audit side, and then we respond. And when we find that the compliance notice was issued in error, and therefore we then contact the finance department to issue a credit note and then communicate with you that the compliance notice has been resolved. So the audit department, insofar as audit requirements, those are the people who will be able to assist you in resolving the audit queries.
Okay, thank you so much, Ozdineo, for that explanation. We will be sharing the presentations and all email addresses are there. Marisa, you want to come in? Yes, come in.
Yes, I had a look at that question. So the question was, are approved building plans okay, or do you need an occupancy certificate? So when a new property is built, when it's a new house or a new sectional title place or whatever, you require an occupancy certificate. And if you do any alterations to the house, so if you add a guest, granny cottage, garage, whatever, you require an occupancy certificate. But if it is just, like I call it, a second-hand house that's being sold, you just require the approved building plans. Occupancy certificates only became law in 1985. So if the property was built before then, there won't be an occupancy certificate on file.
Oh, yes. And I see, Leon, you clarified that as well on the chat. I hope you were answered.
Yes.
Let's go to Ramogedzo. I see your hand. Please unmute and pose your question to the speakers. Ramogedzo. Okay, let me go to Leon. Do you still want to add? Do you have a follow-up question? Can you hear me, colleagues? On the hands,
yes.
I see 2 hands.
Yes.
Okay, maybe they're struggling to unmute. I gave you access. Please unmute. If you're struggling to unmute, please put your question on the chat. Put an email address. I will send it to the speaker after the webinar. They will still assist you. Please put your question with an email address. Let's go to Juliet.
Hi, so I want to get registered as an agent. I'm an admitted attorney. So I wanted to ask if there's any exemption to attorneys, or I also have to do the 12-month training, because I do have experience in property registrations and transfers and the property law, evictions and everything. But when I asked for further information from the PPRA, I couldn't really get a straight answer as to, do I need to serve as a candidate property practitioner or what? Thank you.
Are you saying you want to be exempted for when you are ready to be a principal from audit? You need an exemption from audit. Which exemptions are you referring to?
I'm saying I want to be registered as a property practitioner. But I was told that I need to sort of, like in law, we say serve articles.
Yeah, you have to start as a candidate property practitioner before and write your exams before you can climb up. But send me an email address and we will give you the requirements of how to register with all the documents you would need to attach and the payment. I'll
Okay, so
put my
I still
email
also,
address.
oh, thank you
So
so much. So I also do need to, I'm literally starting from scratch like everyone else, like also with the exam.
yes, remember if you want the category of property practitioner and you've never been one, so you'll have to
Yes.
start as a candidate. You'll have to
Okay,
be under a principal. You have to find a
yes.
principal that is registered and compliant. You work under them. They give you training for 6 months before you can be a full status, and you will need to write the exams. But we will send you all the information.
Thank you so much.
Thank you, ma'am. Ramokhetu, can you try you again before we go back to the charts and the questions before we can close? Okay, you are still not winning. It's fine. Send me an email with a question. Colleagues, if you still remember a question after,
Hello?
you can still, okay, come through. Ask your question. Okay, I think she's struggling with network. It's fine. I think she's struggling with network. Thank you so much, Ozdineo. Thank you so much, Elise, Marisia. Maybe before I close, is there anything you want to add? Maybe last comments before we close?
Okay, thank you, Naledi, for the opportunity, and thank you, practitioners, colleagues, for attending the session. I was happy with the questions that have been posed, and if there are any queries or more information, the email address are available, and even Naledi is very helpful to address your inquiries. So thank you so much for making time. Thanks, Naledi.
Thank you, Ozdineo. Elise?
Thank you very much for the opportunity, and I wish all of the property practitioners and owners all the best with all their rentals. Please reach out to us. We'd love to come and have a discussion to see whether we can help you improve your business or just what's going on. We love feedback, and the PPRI, thank you very much for this opportunity.
Thank you so much, Marisia.
Thank you very much. I really enjoyed it, and I hope that everybody learned something today. And if you want to reach out to me and want me to come and talk to all the practitioners in your offices at one of your meetings or whatever, I also chat about, give you more information on damp, on cracks, on roofs, whatever issues you have. As a property practitioner, please reach out to me. I will come and chat to you guys with pleasure. Thanks a lot.
Thank you so much, speakers today. We really, really, really learned a lot. These presentations were very informative. And I think the takeaways we took from the audit presentation was to look at that section 54 and also use an auditor that is registered with IRBA. And also, if you need to leave the industry, please, colleagues, wind up your auditor's report so that you don't get the compliance notices. And also with, our inspectors in the inspections department that will be coming to your offices, make sure that your financial records are in your offices. And we also saw the presentation that Elise gave on evictions, and we need to look at that act from PI Act. And she also elaborated on the steps from the letter of demand until the last step of the sheriff coming now and executing the eviction. And, that was very interesting. And lastly, the last presenter as well from Gauteng Inspections Property, I heard that you mentioned NHBRC is one of our sister entities. We work with them closely under DHS. I think I will share this recorder with them so that the gaps they have, they can look at that and see how they can improve on that, so that we can help the sector. Because, this is a value chain in the property industry, property sector. So you need to assist each other to get it right. Colleagues,
Yes,
thank you so much. Yes.
I'm actually working very closely with them at the moment to try and sort out all of these issues. But it would be I'll be very grateful if you share it with them. Thank you.
No, thank you so much. Colleagues, maybe before we go, can I just let you know that we are going to Gqeberha on the 28th of November, and 21 November, we are in Free State. 3 December, we will be in Val. I saw colleagues here from PE. Please come to the workshop. We're going to send out an invite on our social media, and we're going to share the slides. Everyone who registered, I am going to email you the slides now, and the recorder, our marketing and communication will put it on YouTube, PPRA TV. You will find as well the previous recordings that we have. Thank you so much for joining. We're going to continue bringing you interesting topics from private sector, public sector, so that you can be informed and have the knowledge and be empowered. And please transfer those skills. Please make sure that the youth also get that information. We will continue. If you're not getting our emails, please email us so that we can update your email with the registrations department. Thank you so much for joining today. If you're going to have lunch, enjoy your lunch. If you're driving, please drive safe. Inspections colleagues, thank you so much for joining with us, Dineo, Elise, Marisia. Thank you so much, colleagues. Bye-bye.
Thank you, Naledi. Bye.